I now hand the conference over to Mr. Devrishi Singh of CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Jindal Stainless Hisar Limited Q3 and 9M FY21 earnings conference call. We have with us today Mr. Abhyuday Jindal, Managing Director of the company, Mr. Ramneek Gupta, Chief Financial Officer, and Mr. Gautam Chakraborty, Head Investor Relations of the company. We will begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive Q&A session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Abhyuday Jindal to make his opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon to everyone. On behalf of the management of Jindal Stainless Hisar Limited, I welcome you all to this forum. I hope that you and your family are keeping safe and well. I would first share the key highlights of the period, and then Ramneek will take you through the key operational and financial highlights. As a result of our strong focus on streamlining operational capabilities, consistent improvement and addition of value-added products, I am pleased to share that the company witnessed a significant improvement in its operational and financial performance during the quarter gone by. A quick normalization in supply chain, along with an uptick in demand from rural and urban centers, and renewed efforts by the industry helped in reviving the stainless steel demand in short span. During Q3 of financial year 21, strong demand was registered in the auto, pipe and tube, and metro segments. Our specialty product division sales grew by 20% on an annual basis. The XPD expansion project is progressing well, and we expect this to be commissioned by Q2 of the next financial year. I am also happy to share that recently our brand Jindal was launched on the e-commerce platform. The brand received a heartening response from customers for its stylish and trendy serveware, cookware ranges in stainless steel. Going ahead, the company aspires to undertake such initiatives which will continue to set new benchmarks in the Indian stainless steel industry. Amongst many accolades during the quarter, we feel extremely honored to have won the prestigious Energy and Environment Foundation Global Environment Award 2020. Additionally, the company was also recently honored with the state-level Energy Conservative Award for the successful implementation of energy conservation measures undertaken. On the industry front, the announcement pertaining to the revocation of the CVD is not in sync with the government's Make in India and Atmanirbhar Bharat mission. We are hopeful that the government will undertake necessary initiatives to protect the domestic stainless steel industry against the irrational and subsidized imports. Nevertheless, focus on infrastructure spending will provide the impetus towards the stainless steel demand going ahead. The usage of stainless steel across sectors like auto, railways, infra, process and consumer durables is expected to remain strong. To conclude, I would like to mention that JSHL continues to work diligently towards improving its operational efficiencies and increase its share of value-added offerings. We are confident that this strategy, coupled with improving demand for our products, will go a long way in enabling the company to deliver healthy performance. Overall, things are moving in the right direction, and today the company remains well positioned to further strengthen its balance sheet and effectively create notable value for all its stakeholders. With this, I would like to hand it over to Ramneek to take you through the financial and operational results.
Thank you, Mr. Jindal. Good afternoon, ladies and gentlemen. I will now take you through our operational and financial discussions for the quarter and 9 months ended 31st December 2020. The quarter witnessed a steady economic recovery that led to higher stainless steel demand. JSHL sales volume stood at 191,272 tons, registering an increase of 22% over the corresponding period last year. During the quarter, strong demand was registered in the auto, pipe and tube, metro rail, and railway wagon segments. The net revenue from operations for the quarter stood at rupees 2,822 crore, up by 29% year-on-year basis. EBITDA for the quarter reported a 67% increase on a year-on-year basis and stood at rupees 351 crore. The EBITDA per ton stood at rupees 18,335 in Q3FY21. Sales from SPT division grew by 20% on a year-on-year basis. Consistent focus on deleveraging largely assisted it reducing the finance cost by 23% on a year-on-year basis at rupees 61 crore. Accordingly, our profit after tax registered a year-on-year increase of 216% at rupees 190 crore. Coming to our 9 months performance, the net revenues from operations stood at rupees 5,641 crore. The sales volume stood at 3,94,157 metric tons during 9 months FY ended 21, achieving 87% of the sales volume recorded during the same period last year. EBITDA for 9 months FY21 stood at rupees 639 crore and EBITDA per ton stood at rupees 16,199. The rise in the raw material prices resulted in positive inventory valuation. JSHL consistent focus on deleverage enabled it to reduce the interest cost by 18% year-on-year to rupees 194 crore. The company registered a net profit of rupees 252 crore during 9 months FY ended 21. Over the last 9 months, we have been able to reduce our debt by rupees 150 crore, which stood at rupees 1,850 crore as on 31st December 2020. The net debt to equity currently stands at about 0.9. Going forward, the company remains committed to further improving its balance sheet and leverage position. To conclude, overall, the sector fundamentals are strong and domestic demand continue to grow at a steady pace. As we look ahead, we continue to see an immense potential for our value-added offerings. A healthy demand coupled with our strong positioning in the industry will enable us to gain sustainable traction over a medium to long term. On that note, I would now request the moderator to open the line for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Chandak from Emkay Global. Please go ahead. Vishal Chandak from Emkay Global, your line is in the talk mode. Please go ahead with your question.
Yeah, thank you for taking my question. So, first question was with respect to the income that has been booked against the 900 crores ICL. Now, with the merger with JSL going through, most likely, what kind of treatment do we look for the accrued income that we have booked, given the fact that a lot of cash has not come through? So, do we plan to write it off against the P&L or it would be routed through the balance sheet directly?
Okay, so Vishal, as we already mentioned in the scheme of arrangement which has been filed with the SEBI, that whatever the intercompany balances will be there as on the appointed date, so after the effectiveness of that schemes, will be getting knocked off through the balance sheet perspective only.
Great. Second, sir, my question was with respect to the price hike taken in the third quarter. I guess I understand that the sales mix has come down, as in the sense that the share of Series 200 has increased slightly. So ideally, if there are no price hikes, then the average blended realization should have been down, but on a sequential basis, the ASP is up by 12%. So what kind of price hike have we taken?
So basically the price hike has only come because of the raw material prices increased. If you see all raw materials from nickel, copper, chromium, and even in that period MS scrap also was going up. So whatever price hike we took was only because of the increase in raw material prices.
So now in Q4, when the part of raw material is coming down, we would be looking at reduction in prices simultaneously. These raw material actually would also get impacted in our P&L. Is that the right assumption?
No, there's no drastic reduction. The only reduction that we have seen currently in our commodities is due to in MS scrap. And the other benefit also that we should get is the duty reduction that has come in the budget this time on SS and MS scrap. So that 2.5% benefit also we will be receiving.
Sure. Yeah. So if I may just ask one small question in terms of how much moratorium debt still is on our balance sheet, or how much has it been repaid?
So in terms of that, the moratorium benefit, what we took it, so that we got the two, installments deferred over the period of the tenure of the loan. So, but as we mentioned in the, opening remarks also, that our focus is continued deleveraging, so which we have reduced our debt. So if I talked about the, current period, FY21, so whatever the scheduled repayment was there, so we have did strategically in terms of reducing our debt and to reduce the interest cost. So we have repaid our many scheduled payments. So if I talked about FY21, so only residual part is left is around 8 crores for the FY21. So that we will be continue to focus also on reducing the debt part. So in terms of the strategic reducing the interest cost.
Sure. Thank you very much, sir.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Raghav Kapoor from Active Alpha. Please go ahead.
Hi, Abhidev. I have two questions. Given your plans to expand capacity in the next 2 to 3 years, are you not considering inorganic opportunities given how the rest of the industry is expected to fare, especially after the budget?
No, we will definitely be looking at all opportunities when they come to us, but the decision that we take is always looking at our balance sheet now, because we want to maintain our ratios. We don't want to, further worsen our ratios, further continuously improving our debt to equity, debt to EBITDA. So organic, inorganic, we will look at both opportunities, but it will totally depend on our balance sheet strength.
Also, it was good to note the awards that you won on energy efficiency and the environmental impact that you're having. On that front, as you know, a lot of investors are very keen to understand how we are measuring the impact we have on the environment and how we actually reduce the impact over time. So do you have any way of measuring the impact to show how we are making progress on that front?
Yeah, definitely. See, now the government is quite forceful on compliance in terms of energy safety. So there is a full actually study that happens. There are, how should I put it, outside sort of parties that are there, consultants who come and they do a separate study on the plan from the government side, which happens, I think, on a quarterly basis, if I'm not mistaken. So if some formal undertaking is required, that we can share with the investor community at large as well. Because these reports are generated, and another thing to be noted that it's very critical for us to do it is because now Hisar plant is quite close to the city. So, the fear of closure or complaint is always there, and that is something absolute. It's, we can't let that happen. So all these measures, environment, safety measures are of the utmost importance to us.
So you'll be able to share that with us if we require them?
Yes, we'll share that with you.
Thanks a lot.
Thank you, Raghav.
Thank you. The next question is from the line of Jatin Damania from Kotak Securities. Please go ahead.
So just wanted to clarify on the previous question, colleague question. So you said that the prices have increased and we have seen the sharp performance in the EBITDA per ton. But how do you see the prices going ahead after the announcement in the budget in terms of the reduction in the scrap duty? And also whether the EBITDA per ton of 18,000, how it is sustainable, or was there any one-off during this quarter?
So, Jatin, good points. So definitely there are some negatives of the budget and there are many positives of the budget as well. What we are predicting that at a sustainable level, we can get an EBITDA per ton of between 14 to 16,000. You know,
Okay.
15 definitely in certain segments will be achievable, but on an average, because of these changes in the budget, we feel 14 to 16 is still definitely possible. That is because of the number of strengths that the company has. You know, over time last year we had reduced our exports because there was good demand at the domestic front. Now we can always increase our exports again, plus we are increasing our capacity in the special products division as well. You know, which has higher realization, higher margins. And because Hisar being such a old plant and there's a full ecosystem that is developed in and around the plant, most of our sales actually takes place in the northern part of the country itself. You know, so we are quite upbeat and quite sure that there won't be too much reduction in our realizations.
Okay, and so in terms of the budget, you are going to say something or highlighting something?
No, I was saying that positives also because the government has increased infrastructure spending. Then they have also reduced the duty on SS scrap, MS scrap, which is one of our major raw materials. So there are good positives to the budget as well, which should impact the company in a correct manner.
Okay. And so in terms of the special product now, since you are saying that you are increasing capacity in the value-added thing, so going ahead probably 1 year down the line or 2 years down the line, what will be the proportion of the special product into the overall revenue mix what we are seeing?
So, Jatin, if you look at the current situation, that in terms of the value-wise, if I talk about that, it normally comes in the range of 11 to 12% of the value-wise. And in terms of the quantity-wise, of the total, segment-wise, it is 5%. And we are talking about the doubling that capacity in that value-added products, and that will be reflected in terms of the quantity percentage and value-wise in the future.
Okay, sir. Thank you. I'll come back in the future and more questions.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and dhanyawad for the opportunity. Sir, firstly, as Mr. Jindal, you have spoken about the merits and the demerits respect to the budget with respect to stainless steel industry. So this revoking of the CVD duty, how has it affected the market dynamics? By the way we exited the December quarter with the business sentiment and the margin profile, how has this decision of the government going back again on revoking the CVD may or may not affect the financial performance? I know operationally also, are you expecting any changes on account of that? If you could deliberate on the same, sir.
So as per se to our organization, the impact will not be to a very large extent. Definitely operationally there will be no impact, I can say, because we have so many strengths. We are operating in all segments, all high-end segments. Most of the imports that we saw in the past and that we expect to come will be more in the low-end segments, more in your utensils, hollowware, pipe and tube segment. Whereas as an organization, we cater more to the high-end process industries, auto market, railway, metros. PNT also we are there, but PNT actually very strong branding we have done there, which is giving us good value in the market, good premium in the market as well. So that is planned to continue. So in terms of financial and operational performance, because of the strength that the company has, there definitely won't be any impact. Financially, it is at least this quarter we see absolute minimum impact coming, but it's only that because this budget was announced only a week back, the major impact is still to be seen. and yeah. Basically,
impact in what sense? Impact in what sense are you betting?
So in fact, like I said, like in Q3 we had the EBITDA margin per ton of 18,000. Now because of this coming, we see EBITDA margin dropping to between 14 to 16, not below that.
Okay, and on the volume terms, sir.
The volume term, we don't see any reduction at all, because if, like I said, if there is any reduction in demand in the domestic market, export market is completely available to us. There is very good demand for our products. We are one of the best quality players in the world. So we are consistently supplying to Europe, America and Russia. Over the course of last 1 year, we've actually brought it down drastically, which we can easily increase again.
Okay. Sir, we did invested in one of our furnaces to reduce the consumption of graphite electrodes by a significant percent. So, are we accruing the entire benefit of the same? I think the 75% the consumption should have gone down, as been articulated by the team earlier.
So yes, so definitely there is an impact of that. It is almost comes to the 2 to 3 rupees, I would say. Varies from time to time, but that's an average that we have an impact of using the induction furnace as compared to an arc furnace.
Right, sir. Sir, if we take now the merger process, sir, even sir, have we started at what stage are we, sir, currently, and going forward, what should be the timeline by which this is going to be over? And in your presentation also, sir, if feasible, if any key milestones or observations can be given to us with a PPT presentation with a significant color change, that whatever has been, what is achieved and what is going to be the next process, investors and analysts could track it through that platform itself. Where are we in midst of achieving our merger goals?
No, good suggestion. I think I will request the finance team to prepare and work on it.
So, Saket, just to keep you updated, which as we already informed the respective through our results also, that as far as the status of merger is concerned, so we have already filed with the both the stock exchanges, and stock exchanges is at the current stage. By 10th of that, they will be by 10th of they are receiving the comments from the public side. So after that process is over, whatever the initial queries we have received from that, we have been answer to that part to the stock exchanges. And after this, after 10th, they will now, move to the SEBI as the next procedural part. So as far as the milestone is concerned, so if after that SEBI approval,
there is a slide on this also, Saket, in our investor presentation that we've uploaded.
Okay, sir. I missed it there. I'll go to the same. Sir, in your slide also you have mentioned about this inventory gain part.
Procedural as well as the timelines has been mentioned there.
Okay, sir. I'll definitely relook at them, sir. In your presentation, you have mentioned about this inventory gain part also, sir. So how much has been this inventory gain due to the rise in the raw material prices, sir, for this quarter?
Yeah, Saket, when underlying raw material prices are on the upward trend. So in our industry, we have seen that because whatever the impacts come into the stock gains. So if I talk about that, because this also will get reversed when the prices will be on the downward side. So this is a blend of that part. So it is always, we have seen that whenever there is a rising trend, you will always see the inventory gains, and whenever there is a downward trend in terms of the prices, so it will also reflect it as the stock losses also in that part.
That is true, sir. So can you quantify for us for a better benefit of getting an understanding, gauging what the quantum is?
So if I talks about, during the current years where the, first quarter was affected by the pandemic also, and overall balancing perspective, it will be in the range of, 25 to 30 crores in the 9 months period, whatever we have reported the numbers.
Correct. And sir, currently ferrochrome prices, as Abhijit sir has also spoken about in the last call, JSL also, sir, they are just on an upward spiral around to 92 or 95,000. So how would this going to affect Hisar performance going forward, sir?
See, this is possible to the customer, which is, so we don't see any major impact coming because of this.
And availability, there is no issue with that, sir?
Availability? No, because ore is available within the country as well, and we can import it as well. So ore is not an issue.
Okay, sir. There was issue with ore, I think, so with some South Africa. Some stories were popping up.
South African ore is available. It ends up being a little more expensive because obviously if you buy domestically, that will all give you the best. But if ever there is some shortage domestically, we can always enter the international market.
Last point on the strategic part, sir. As you have told that Hisar would be a more SPD type division, wherein due to the land locking part, you are restrained to expand. So, in order to improve the bottom line, what are the changes in the product profile or the catering to new markets or increasing the market share in the existing market? And sir, secondly, sir, on the subsidiary part, we find that for this quarter also, the subsidiary performance has been commensurate when it has done well over a period of time. So I think I missed your investor presentation. Had you articulated what have been the performance for the subsidiary also, and what are the steps you are taking forward to improve your performance for the lifestyle business and the other piece, I think the steelway part?
So yes, subsidiary performance is given on the investor presentation as well. So we would request you to have a look. In terms of improving our bottom line for JSHL, like we said, we're doubling our SPD. So that itself gives a very good impact to our bottom line. Plus, we're entering more high-end segments like defense, aerospace, catering to more high-end, chemical industries, nuclear segments. All this will be done from Hisar specifically because the tonnage is on the lesser side as compared to our Odisha plant. So because we have a 50-ton furnace and the orders are small tonnages but high margins, so these are the areas we're going to cater more and more from Hisar. Point blank, blade steel, these are the areas of focus. In terms of subsidiary, JSHL has been doing quite well. Every quarter on quarter we are growing. Our strategy there is to further increase the OEM business, to further supply just-in-time requirements to the OEM community, which also will end up giving us better margins. Lifestyle, it's been a bit of a cyclical performance, I would say, this year. But again, with the kind of infra projects announced and with new airports, metro stations, railway stations coming up, Lifestyle is the best company available to cater to these segments. So we feel very strongly that in the coming few quarters, Lifestyle performance will again improve. Kitchens are also we seeing very good uptake because it's in line with the infrastructure. As infrastructure picks up, Lifestyle business will also pick up in same line.
Okay, sir. And for the 9 months, if the CFO has can give us what have been the cash flow and how has that worked? How have been that utilized? And are we paying any taxes, sir, or is it only a provision under the tax expenses, the 64 crore current tax?
Saket, as we mentioned that because whatever our focus is always on deleveraging, so this is what we mentioned also in the opening remarks also that, and I was explaining that also that we have strategically done the repayments of the scheduled payments, not only for the FY21 ended, even for the FY22 also. So this is what we are doing in terms of the cash flow perspective, so that we can deleverage this more. So because what we are trying to do that even for the FY22, whatever the scheduled payments are there, so we will be targeting to prepay that part also in order to further deleverage that part. So this is why the way we will be utilizing our cash flow in terms of strengthening our balance sheet.
And on the current tax part, sir, are we paying any taxes? I mean, actual cash outflow is there on current tax account of 64 crore, or is a provision into, or how much tax have we paid in cash for this 9 months?
So as far as JSHL is concerned, we have already opted for the lower tax regime, so which is around 25.17%. And as for we normally pay as per the the advance payment as per looking at our profitability since in the whole year. So first quarter was washed out in terms of that perspective. So looking at the advance tax payments, normally we do as per our projection planning. So as the year end will be moving, so we will be updating to the cash flow how much we have paid as per the installment to the government, required installment to the government.
Okay, and last point is on the stores, spares and power fuel part. These two items have shown significant increase, is it commensurate only with the increased production level, or are we seeing any inflationary trends with respect to stores and spares and power and fuel heads?
So if you look at, power part and the store part, which we are referring to that in terms of the, per ton basis, so this has been correspondingly, you rightly mentioned that it has been increased in the volume also. That is the reflection of that part. And as far as, store and space part, which, includes the consumption of electrodes also, so which is now in terms of the, fuel, I will say, 56% down as compared to the 9 months of the last year. So, but yes, in terms of the volume increase, this has got reflected in terms of the increased part there.
So there is no significant increase in the cost, sir. I think the power and fuel and was earlier due to the easier, lower grid prices from the state of Haryana or nearby. Are the lower prices still prevailing, or have we seen any? I wanted to know per unit cost, any significant change that has happened. I think so. Previously, it was much lower than the preceding quarters.
So in terms of the power, so because we don't have a captive power there, so we normally get it from the grid. So our objective in order to reduce the power cost is that blend of that, what we get it from the IX as well as from the grid part. So we do the blending from that perspective. So that really helps us to reduce the power cost at the Hisar plant. And as far as cost increase is there, marginally there has been electricity duty has been increased by the government since October 2019. So because they increased because this is a volatile little bit, so they increased from 45 paisa to 1.16 paisa, and now today is 1.01. So because of that fluctuation, the minor rate has been increased, but overall it is in the line of the production increase.
Thank you. I would request Mr. Kapoor to rejoin the queue for follow-up questions. We would also like to remind our participants, if you wish to ask a question, please press star and 1. The next question is from the line of Devang Sangvi from ICICI Direct. Please go ahead.
Thank you for the opportunity and congrats on a good set of numbers. My first question is here in the SPD division. We reported a healthy 20% growth on SPD division, and we are expanding the capacity also. So what type of volume would we expect next year in the SPD division?
So SPD will be from 14,000, we will double it to 28,000 per year. And it will be commissioned by Q2 of next financial year.
Right, sir. So how quickly we can ramp up the capacity post-commissioning of this SPD division?
So it will take, to really commission it to this rated capacity will at least take us about 6 months.
Okay, sir. Right. And this 20% YoY growth is on the quarter basis. So what is the 9-month basis growth for the SPD division?
So if you look at the 9 months basis, because in the this pandemic year, so Q1 was washed out. So it is if I look at the 9-month period, it is a little bit decreased. But in terms of the quarter-wise, when the demand get uptick in terms of the different segment, so that also has reflected in terms of 20% quarter-on-quarter basis increase.
Right, sir. So next year also we will have a similar volume as we did do this year in FY22.
So we should see a higher volume as compared to FY21, like Ramneek said, because Q1 itself, sales wasn't very high. So this full year we hope no close down or shut down because of pandemic. So volume should be higher as compared to FY21.
Yes, I was actually highlighting that what quarterly run rate we did this quarter, we can have a similar run rate next year. That was
Yes.
Right, sir. And secondly, in terms of the electrode cost, how is the trend in Q3 versus Q2, and what is the trend in Q4? How we expect this cost to move?
So in terms of if I look at from Q2 to Q3, so the cost has come down, by 6% as from Q2 to Q3. So if I talk about today trend price, so it is around 206 per kg it is coming there. So that is the trend right now in terms of the electrode part.
And we're also working with the government to reduce the import duty on electrodes, graphite electrodes.
Okay, right, sir. And one bookkeeping question, what will be the mix in terms of 200, 300 and 400 series for the quarter?
So if I talk about 9 months basis, so that 200 series is 45% and 300 series is 39% and 400 is 15%.
Right, sir. Thank you, sir, and all the best. I'll join back.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Chetan Shah from Jeet Capital. Please go ahead.
Yeah. Good afternoon, sir. Just wanted to understand the big picture about how you see a global market in a stainless steel. The context to understand this picture is to understand that how you see impact of any import, if at all it can come here, and who are the other players apart from us is planning any kind of capex in this area in next 2 to 3 years. If you can give us some flavor on that, that will be very helpful to understand the markets.
No, very good question. So first I'll take up in terms of capex expansion. That is the reason and that is our approach to the government, that because this duty has been revoked, a lot of companies, were looking at capacity expansion, stainless steel companies. Now with the revocation of this duty, a lot of companies will have to re-look at their plans and change their plans. So I don't feel any company other than us, because of our strength and size and flexibility, are looking at any future capex in the stainless steel sector. Secondly, in terms of the international market, there is stainless steel, if you see over the world, is the fastest growing metal. You compare it to aluminium, steel, which is the same thing in our country. We are more buoyant and bullish about the demand growth in our country, specifically because as and when any economy does well, as the GDP grows, the SS consumption grows along with it. And with the news in the industry, with the budget of infra spending, railway spending increase, that should also give a very good push to the domestic demand.
Okay.
Internationally as well, we have seen actually good pickup in most of the countries. China, the domestic demand itself has picked up within the country. US is picking up as well. Europe is always a good economy for stainless steel sales. So I would say that internationally stainless steel grows at about 5 to 6%, and domestically stainless steel we can say grows at about 9 to 11%.
Sir, if I may allow to ask one more question, I just trying to understand the economics of the capex. So what we are trying to do is more like a brownfield project on our existing facility and trying to double our capacity. But if somebody wants to set up a independent 1 million ton of plant, what kind of cost per ton works out to be, and how viable it can be if this CVD doesn't come back, and when it becomes viable for them, sir?
So Chetan, definitely we would like to answer this question of yours, but because the expansion is happening in the other organization, I will not be able to pick it up now, but I request you to put this question up to our investor relations team and they will provide you the answer, because all this we conveyed in our previous call and we have a full reply there. So I'll request Shreya and Gautam from our IR team to connect with you and give you a...
No problem, sir. Sir, thank you so much. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is a follow-up from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Dhanyawad, sir. Sir, we have been seeing and reading in newspapers about SAIL putting up their Salem unit or any stainless steel division on sale and inviting EOI for the same. Any update you would like to share, and whether we are participating, what kind of...
We are definitely looking at it, because since this is our industry, we won't leave any asset that comes on the block. But again, it has to make absolute financial sense for the organization, and then only we will go for this. It is definitely a good asset. There are many challenges still involved with it. Status of it at this moment, it has been further delayed, if I can say. They've been talking about it full last financial year, and even now there is no clarity at this moment. There is a target. They would like to do it. As an organization, we will definitely be there and looking at it. but exact status on it is very tough, difficult to convey right now.
But you have reviewed the asset and how does it gel
No,
with
that
our...
is exactly why it's delayed, because we have not been able to visit the plant and study the data room and everything, what entails, do proper due diligence. So till that does not happen, it'll be very tough for me to answer whether a company, if we are interested or what is happening with the process. That's why I'm saying it is further delayed.
Okay. Sir, lastly, after the merger announcement, you very categorically mentioned that it is not only the ratio part that investors and the analyst community should look. There are greater synergies and there could be a sea change in the way the GSL story is looked earlier and now. So, sir, if you could articulate to us what is in store for us, sir, going forward as and when this story progresses and it consolidates into a strong entity going forward that God willing, it should happen down the line. That was my more holistic question was.
So in terms of, what I had said, actually the maximum benefit we will actually achieve is on the balance sheet. That is where we're going to see the maximum synergy and benefit coming out, because over the course of last 5-6 years, we have been running both plants at very high efficiency already. There will definitely be synergies in terms of, because we are one big organization, top 10 stainless steel producers in the world. So our negotiating power with logistic providers, with suppliers, with other vendors is definitely going to increase. But because we were already operating at a very high efficiency, I will not able to say that, major impact will come from that area. But definitely on our balance sheet, ratios, you will see a drastic improvement.
Sir, as we see, sir, now, our is a commodity product, sir, but there is a large portion of stainless steel work that we do that is a specialized one, but it gets discounted due to this commodity nature of the raw material and the finished prices variables. So, sir, for investors who put money for looking at the longer term horizon and not for looking to buy at the lower part of the cycle and exit at the top, trying to make quick buck, what is the message for investors who can stay along the journey? Sir, what I have felt and understood is that in the commodity investment, if you have not timed your exit properly, you may be caught in the wrong loop. That has been in the case with your raw material part like graphite. That has been the case with carbon steel. But so how different is how different is it the stainless steel part? Because what we find is that it is more of a specialized type and a high-end market that generally you are addressing to, and that is not subject to the same vagaries as has been the case with the carbon steel and
the answer is in the flexibility. As an organization, as a company, we operate in multiple segments, multiple grades. So how do we maintain the profitability? How do we maintain our volumes? Is by our flexibility. It is very easy for an organization like us to switch from 200 to 300 to 400. And that is one area. So like in 400 series, there will be least raw material impact as in terms of volatility. If there is no nickel in that, which is the highest and most volatile raw material. So with focusing more on 400 series, we reduce that impact volatility, and margins are also very strong, and it goes into high-end markets again where approvals are required, auto, railways, white goods. So the answer, how are you going to say that how do we compete or how do we compare ourselves with carbon steel players or how do we protect or influence the investor community? It is with the strength of our flexibility and the demand that we have in the highest quality segments. Same way, which is why Hisar, like we're doing, we're expanding in our special product division, which gives us the highest realization, highest EBITDA margins. So that way, because commodities also we need to increase with the demand increasing in the country, we want to maintain our market share, remain the market leaders in this segment. So that's why we need to play in the commodity segment also. but by remaining flexible, switching from one grade to the other, one market segment to the other, we can cater and protect our margins.
So, sir, a good indicator is the government capex, sir. The more money is put into infrastructure, the more money put into railways, the oil refineries, and all these should sound good for the industry.
Absolutely.
Okay, so that is going to be a good indicator of how the demand is likely to shape up. And for the margins part, you need to develop that. You have developed, and you need to better those capabilities that they could be consistent. That is what should be the key takeaway, sir.
Absolutely.
Correct, sir. Thank you, Mr. Jindal, for all the clarification, and we hope to participate and be a partner in Redmi going forward.
Thank you so much. Hope to see you. Thank you.
Yes, sir. Thank you, sir. Bye.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you. I would once again like to thank everyone for attending this call and for showing interest in Jindal Stainless Hisar Limited. Jindal Stainless Hisar Limited is well poised to maximize all opportunities for the remaining part of the current fiscal year and, as expected, more buoyant next fiscal. With this, I hope we have been able to answer all your questions. Should you need any further clarification or would like to know more about the company, please feel free to contact our investor relations team or Citygate. I thank you once again for taking the time to join us on this call, and please keep safe. Thank you.
Thank you. On behalf of Jindal Stainless Hisar Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.